Hello guys, welcome back to my YouTube channel. In this video, I'm going to be explaining to you the concept of complex market structure. All right. Before now, I've made a video on basics of market structure. So if you're new to this channel, I encourage you to subscribe to it, hit the bell and the like button so that whenever we have any new video like this, you get the notification and you endeavor to watch them to improve your trading career. All right. So in the previous video, we talked about the basis of market structure. Here we're able to discuss the type of movement we expect to see in the market, that a market can either be in a bullish move, or the market is in a bearish move, or the market is consolidating. We look at the criteria to identify a bullish market as well as the bearish market. We also talked about the laws of price action that says for every impulsive move, there is a pullback. All right. So we are going to continue from that. We are going to continue from where we stopped in the previous video. So please, if you have not watched the previous video, for you not to get confused, I encourage you to, go back to it and watch it. All right. Like I said, there is a Telegram link where I draw signals on various synthetic pairs and other currencies as well. So if you don't mind, you can click on the Telegram group. It's there in the description button below. So without wasting much of our time, let's dive into what we have for the day. So we're going to be discussing what complex market structure. Now, like I explained to you before, a market can either be, or if you identify a bullish market in this form, this is a break of structure. This is a break of structure. All right. Now we have a break of structure, and this particular point. This particular point is the low. This is the high. This is the higher low. And this is what? The higher high. All right. This is the higher high. So what with this characteristic, owing to the first video in the first video we made on market structure, we agree with me that this particular description or characteristic is talking about what? A bullish market. Okay. Now, the move that causes a break of structure to the upside is known as what? The impulsive move. All right. This particular move to the upside is known as the impulsive move. Why this particular move? The pullback. This particular move is known as the pullback. The pullback is the move that creates what? The higher low in a bullish market. All right. Why the impulsive move is the move that creates what? A break of structure to the upside in a bullish market. So in a bearish market, if you have it in this form, this particular portion is known. This is the high. This is the high. And then we have the low. We have the lower high. And then we have the lower low. So this move that creates the lower high is known as what? The pullback. Okay, this is the pullback. This is the pullback. Why the move that creates a break of structure to the downside is known as the impulsive move. Okay, it's known as the impulsive move. So I just want to remind us of what we did in the previous video. So make sure you watch that video for you to better understand what we are about to treat in this particular section. Okay, so That is that about a bullish. That is that about the things you need to see to call a market a bullish market or a bearish market, okay? For a market to be bullish, there must be a continuous break of structure to the upside. The law of price action says that for every impulsive move, there is a corresponding corrective move or a pullback. Those corrective moves are referred to as a pullback. And now, because of the fact that a pullback can be a simple pullback or it can be a deep pullback, we have a concept known as what? Complex market structure. When a pullback is deep enough, that particular type of pullback creates or produces complex market structure. Okay, so when you look at this when you look at this diagram, when you look at this point, what we have is a bullish market with what? A simple pullback. Okay, you see, how do we know that it is bullish? This is the high. This is the low, the high, the higher low, the higher high, higher low, higher high, higher low, higher high. So you see a continuous break of structure. This is a break of structure, a break of structure, a break of structure to where? The upside. Okay, so this is a bullish market with a simple pullback. All right, so now if you look at this particular phase as well, if you look at this particular part, you also have a bullish market with a complex pullback. All right, we have a bullish market with a complex pullback. So this, if you look at this particular phase within this region, you might be thinking if the market has already switched bearish. Okay, within this region, you might be thinking if the market has already switched to a bearish market. But all you're seeing in this leg is a complex pullback, okay? It's a deep pullback. Now, you need to understand that before a market can actually change phase, there is something they call shift in market structure or change of character, right? So for a market to switch from being a bullish market to a bearish market, there must be what? There must be a term, there must be a change of character, or there must be a shift in the market structure. Okay, so all this you're seeing here is just a complex pullback. And at the end of it all, market will still go in the desired direction, which is what? To create a new higher high. All right, which is to create a new higher high. So you need to pay attention. This is what you see on the chart. This is what you see on the chart. So the knowledge of your complex market structure will enable you to mark a range in the market and understand when a market is still bullish or when a market has changed from being a bullish to what? A bullish market to a bearish market. Okay, so within a higher high and a higher low, we have what we call a range. I'll take it again. I said within a higher high and a higher low, we have what we call a range. Within a higher high and a higher low, we have what we call a range. All right. So whatever is happening in this season, in this particular phase, as long as the recent higher low has not been taken, this particular portion has not broken to the downside, the market still remain a bullish market. I hope that is taken. I'll take it again. I said that for as long as the recent higher low in a bullish market has not been broken to the downside, that market remain what? A bullish market. The moment we see that the recent higher low has been broken to the downside, what we have is no longer a bullish market, but unconfirmed bearish market. Okay, so this is what I mean by that. If you make an observation that this is the recent higher low, if you now have if the market decides to do something like this to the downside, what we have now, because the recent higher low has been broken, so what we have at this point is known as what? Unconfirmed bearish market. Okay, so for this market to confirm that it has switched from being a bullish market to a bearish market, we want to see a pullback to create what? A lower high, and then we want to see a new lower low. We want to see a new lower low. So the moment we make this observation, we are rest assured that what? The market has switched fees. But if we do not make this kind of observation on the chart, the market still remain a bullish market. Okay, so this is how a complex market will look like. So I'm going to take you through the chart and then make some marking on how to show you how the complex market might look like on the real chart. But this is how it should be. This is just a textbook analogy. This is just a simple pullback. When you have the market break a structure, have a simple pullback, continue breaking structure to the upside. So the same thing happened when we are talking about a bearish market. All right. The same thing happened when we talk about a bearish market. The market will continue to break structure to the downside. And for as long as the recent lower high has not been broken to the upside, that market still remain a bearish market. Okay, so I hope that is taken. So I want to quickly show you what I'm saying about the bearish market. Then I will take you to the live chart just to see a few things happening there. Okay, so you have it in this form. You have a high, you have a high, a low, a lower high, and then you have this, a lower low. And the next thing you might be seeing is something like this. You see the market creating internal structure. Yes, all these pullback, they are internal structure, all right? They are internal structure. You see the market creating something like this. See the market creating something like this, and eventually it crashed all the way down, pull, and then you have it in this form. Okay, so this is still a bearish market, and what you just need to do is identify the break of structure. This is a break of structure. This is a break of structure. This is also a break of structure. All right, so this market remains a bearish market. Whatever you're seeing within this region is just an internal structure. Okay, it's just an internal structure forming complex pullback. Okay, all these are internal structure. All right, so you need to pay attention to them. Like I said, that between a higher high and a higher low, there is what? A market range. And between a lower high, this is what I mean by a lower high. So this is a high. Okay, just follow the marking. This is the high, a low, a lower high, a lower low, and then you have this internal structure. These are internal structure. Whatever is happening here is just complex pullback. All right. At the end of the day, you see a break of structure to the downside again to create what? A new lower low. And then we have this internal structure to create what? A new lower high. And then we have the lower low. Okay. So by expectational order flow, when you meet a market in this phase that has broken structure to the downside to create a new lower low, what we expect is that there should be a new pullback, because the law of price action says that for every impulsive move, there is a corrective move, or there is a corresponding pullback. Okay, so by law of price action, this is an impulsive move that created this lower low. So we expect that there will be a pullback to create a lower high before we expect the market to create a new lower low. So I hope that is taken. I will take you to the charts to show you how some of this thing works. Okay, so this is the chart of volatility 10 index, V10 index, V10 index. Okay, so you see within this period, you see that the market was bearish. And in fact, we have this bearish channel. The market was bearish within this phase. It was bearish within this phase because what we are saying is that after this, okay, this was This was a high. Okay, let me just start from here. The market created this. This was a higher high, a higher low, a higher high, a higher low. Then the market created this higher high. All right. What happened is that it created a higher low, but this higher low failed to create a new higher high. And what do we observe? We see that the market crashed all the way down, and at this level, the market break structure to the downside. Okay, immediately this recent higher low was broken, the market switched from a bullish market to unconfirmed bearish market. Okay, now what other observation can we see? After the market crashed all the way down, it pulled back to create a new lower high. It pulled back to create a new lower high. And if I zoom out for you to see, this is what I mean by what? The internal structure. This is what I mean by the internal structure. These are just the pullback we are seeing. You can see the market doing something like this, before it eventually crashed all the way down. All right. So these are just internal structure. Same thing. What you're seeing here is what I explained to you here. All right. Is what I explained to you here. So you observe that this is how a rechart actually looks like. Okay, this is how a rechart actually looks like. So for us to continue with our markings, there is a break of structure here. There's a break of structure here. After the market break structure, it came all the way down, came to this place. This is where the next break of structure happened. After the market pulled all the way to this point, it breaks structure to this side, and it continued breaking structure to the downside until we arrive at this particular phase of the market. So this was the last break of structure. This was the last break of structure to the downside. This was the last break of structure to the downside. Then the market pulled back. You can see the internal structure again here in this particular place. After this break of structure, you see the market doing series of, creating this internal structure, up to this level. All right. So at this point, what you expect the market to do is that the market should crash all the way down from here. The market should crash all the way down to create a new lower low. But instead, the market failed to create a new lower low and then break structure to the upside. Okay. Immediately this point was broken to the upside, the market switched to what? Unconfirmed bullish market. Okay, this is a break of structure to the upside. Unconfirmed bullish market. Okay, then after that, what next do we see? There was a pullback. This was the last high that was created. There was a pullback to create what? A higher low, and then the market break structure to the upside again. There is a break of structure to this point. At this point, there is also a break of structure at this point. All right. And then what do we see? You see that the next pullback, the market was not able to create a new higher high. Rather, there is a break of structure to the downside along this region. Okay. Because of this break of structure, we can say that the market has switched again from being a bullish market to unconfirmed bearish market. All right. Then the market breaks structure to this point. Then we expect that there should be a pullback. Before the market creates a new lower low. And then you see the market rallying all the way up. If you pull out your Fibonacci, this will be almost, although it seems like I can actually refer to this point as what? A fake out. I can actually refer to this point as a fake out. Then you see the market pull all the way to this point. This is more like 100% Fibonacci level. All right. And then what do we see? We observe another break of structure to the downside along this region. Now, what we expect again is that after this market pulled back, we expect that the market should crash all the way down. But what do we observe? Our observation is such that the market went all the way up to create what? To break structure at this point again to the upside and create a new higher high at this point. Now, all the sell we are seeing around this region has become a pullback. Okay, what we are seeing here right now is just a pullback. And what kind of pullback? Complex pullback. You see what the market is doing. It's creating this kind of pullback. This is a complex pullback. So at the end of everything, we expect that the market will still, continue breaking structure to the upside to create a new higher high. All right. So this is how complex market structure works, and this is how you can understand them. Understand when there is a break of structure, try to identify the range in the market, and you can compare and contrast all of these things if you understand the basis of market structure as well as what complex market structure. Okay, I hope this video is helpful, and if you enjoyed the video, please don't forget to hit the subscription button and the likes button. Okay, thank you so much. See you in our next video.